Every time you place a trade, someone gets paid, even if you lose money, especially if you lose money. Most people think the trading industry makes money by predicting markets correctly. It doesn't need to. It's built to get paid either way. And by the end of this video, you'll understand exactly how. Start with the simplest piece, the spread. You're never actually trading at one price. You're trading across two, a buy price and a slightly higher sell price. And that gap goes straight to whoever's on the other side of your order. It's invisible on the screen. It's also collected on every single trade placed, win or lose by anyone ever. Then there's the market maker, the one actually filling your order. Their job was never to predict where the market goes. It's to stand there all day, buying when you want to sell and selling when you want to buy, pocketing that spread thousands of times a second. A fraction of a cent times billions of trades a day is the entire reason high-frequency trading exists as an industry. Now, here's where it gets interesting, because the newest layer built on top of all this is the prop trading firm, and it's the one most people don't fully understand yet. The pitch? You don't have $100,000 to trade with. They do. Pass an evaluation, prove you can follow their rules, and they'll fund you, keeping a cut of the profits in exchange for the capital.
Here's the number that changes how you should read that pitch. Industry-wide, only 5 to 10% of traders pass the evaluation on the first try. Data tracking 300,000 funded accounts on one major platform found that only about 7% of them ever saw an actual payout. Sit with that for a second. 93% of funded accounts, funded meaning they'd already passed the hard part, never paid out at all. Which means the evaluation fee was never really a formality standing between you and the funded account. For a meaningful share of this industry, the real product was never trading. It's traders.
Thousands of people, each paying to attempt a challenge, most of them destined to fail it, in an industry where the revenue was designed to work whether any individual trader succeeds or not. In August 2023, that model collided head-on with regulators in the most public way this industry has ever seen. MyForex Funds, at the time the largest prop firm on earth, serving more than 120,000 traders across 80 countries, was shut down overnight. Frozen accounts, dead website, no warning. The allegation from the CFTC? The firm had collected more than $310 million in fees since 2021, while allegedly acting as the counterparty to most customer trades, meaning it profited directly, dollar for dollar, every time a trader lost. The story doesn't end cleanly, though, and this is the part that makes it genuinely complicated. Nearly 2 years later, the CFTC's own case was dismissed, and the court sanctioned the regulator itself over how the case had been built. Whatever was actually happening inside that company, the traders who'd paid their fees and watched everything freeze overnight never got a clean answer either way. Here's what the story confirms, regardless of how that case ended. An industry built around evaluation fees does not need most of its customers to win. It needs them to keep paying to try. And the traders on the other side of all of this? The actual individual people risking their own money. The research on them is remarkably consistent across 3 completely different countries. A study following Brazilian futures traders for over 300 straight days found 97% of them still lost money by the end. In Taiwan, researchers found less than 1% could predictably profit after fees over a long enough stretch to rule out luck entirely. In the US, a study of over 66,000 households found the most active traders underperformed the market by 6.5 percentage points a year, their own activity quietly working against them the whole time. 3 countries, 3 different markets. The same number again and again. The overwhelming majority lose. So the spread collects on every trade. The market maker gets paid on every order. The prop firm collects on every evaluation. None of them are betting on your success. None of them need to. The trading industry doesn't sell profit. It sells the attempt.